Good day. Ira Epstein of Linn and Associates with your SPDR ETF video for this Thursday, and we are now at the 21st of May, 2020. Well, markets were in the red today, a number of them, as you can see, but a lot of it might be the Memorial Day holiday coming up. Remember, this is a U.S. holiday. Asia's open. Europe's going to be open. A lot of traders, they're just looking at the markets. I don't disagree that there aren't a lot of people back at work, so it's not normal. And I don't disagree there's not going to be a lot of travel. And I don't disagree there's not going to be a lot of parties. So I understand, and trading takes on its own role. So we'll see what happens there. In Chicago, by the way, the mayor just revoked the idea of a May 29th opening for outdoor restaurants. I have no idea when they're going to reopen. The lakefront, she doesn't even talk about reopening that, and the running trails. It's amazing. All right, when we take a look at the market here, I still see a gap that the market probably wants to fill right in this zone. It's close to current action. I don't see why it doesn't go for that. The trend is certainly up. And remember, this and QQQ, they've been the powerhouse markets that have carried the market. You've got the higher lows, the higher highs, a clear uptrend, and what a run. You know, I know a lot of you, I've read on the website where people are saying he didn't catch this move. Well, number one, I wasn't trying, and my work, number two, told me not to try. So that's two things. But as investing, that's not true. I was on Fox TV in these videos, and I said, you're looking at generational lows. I don't care if you took these lows out. I'm not looking for a crash out of these markets. And I said with Liz Clayman on her show, no, I think you have to nibble and buy. I know that I said on Bloomberg the same things, and right at the same time frame. Now, I haven't been on Liz's show since this has begun, but I'm going to find out why that is. But I am on Bloomberg on a fairly regular basis. And yeah, I still think that that is the case. In other words, I don't think that what we've got is enough to break the backbone of the American economy. I do think it's a major blow, a gut-wrenching blow. And I do think the market in this euphoric move is going to give back some of that. That I do believe. But as for coming down and crashing through these lows, I'm not in that camp, especially in the tech stocks. When I look here, I can see how the markets run up, but where do you think the resistance is? Well, if we run this upper Bollinger Band, that's where you're fighting a battle. Notice it's not able to stay over it. It's just the battleground. So the next break down to the 18-day average might be where the traders again step in if the market isn't in overbought condition. What kind of condition is this in? Well, both numbers are over 80 today, so that's one of the steps of embedding. Yesterday they were both over 80, but not the day before. You need 3 days in a row. So the odds are you don't embed. You heard what I just said. So I would not be surprised the market has another break tomorrow. I'd prefer to see it embed, but we'll see what happens. When we come to SMH, you're fighting the same battle. You get to this upper Bollinger Band, and each time it's hit it, I don't think you've done poorly by coming out of the market and looking for ways back in. That's, I'm a trader, not sitting there. And by the way, ETFs are meant to be traded. They're not part of the other way of individual stocks that people hold on to. XLI, you're caught in this pipe. Just back and forth action, and accept that. This is called the whipsaw. You get to the upper Bollinger Band, you got to learn how to bail. I know you think you're going to break out. Well, then you come down to the lower. Don't look for the breakout. Until it breaks out, it doesn't break out. Does that make sense? But that's the way you got to learn to trade. Now, you're starting to go sideways in the energy, just beginning it. You had been pointing up. Now the pipe is starting to form. So this is very subtle, and you learn to watch this. But as soon as you start going sideways, your horn should come up. Uh-oh, the market may have run out of momentum to the upside. The trend is up. I'm not fighting that. But I'm cautious and very, very overbought. QQQ, a key reversal day. Now, what is a key reversal? What is an outside day? They're identical except for where they happen. On a key reversal, it's the highest high of a move. You had one of these before, right here. Then you fell back to the 18-day average, found your support. I'm looking to see if we had any others. No. You don't get them very often. Go on your chart and you'll see what I'm saying. So, is it a sign of weakness possibly? Yep. Is it a sign that if you take that out, you catch a group of people here and you might shoot again to the upside? Yep. But you first got to get through that high. So you're in the process of trying to set up a trade top as a market technician. What about the embedding process? Well, both numbers over 80. Both over 80. But what about the day before? Just like XLK, same thing. So tomorrow's an important day. In the emerging market ETF, the trend is up, higher lows, and you finally hit the upper Bollinger Band yesterday and you're backing off. You are overbought, but you're caught in this pipe. You see it, I see it, and that's often a hard thing to trade because where the buy signals come in or the sell signals come in on the downs or the ups doesn't leave you much room. So I've learned to walk away from those. GLD, I've been looking for a pullback. You're getting it. Momentum turning down. Market broke through this, so you now have a lower low, higher high. What's the first number that you hear me say all the time that I look for the markets to go back to figure out what they're doing? It's the 18-day average of closes, that line in the sand, that red line. That's what you're doing. What about the gold miners? Identical. Look at how momentum dropped away on it. What about TLT? Higher lows, higher highs, resistance. Here, what's the bias? Down. Where's momentum? Flat to trying to turn up. The market's all over the place, not giving us any clear signal. In the euro, the market's made a run with this lower low, higher high into yesterday, not today. Yesterday was the day that you're coming out. When you hit the upper Bollinger Band and the 100-day average, it's like you've hit the linebackers. They're bigger than you. Come away from that market and you can see what the market did just now. So you put it all together, you're trying to figure out where you're at in these markets. And I think where you're at is in a lot of trading affairs. Certainly there's been an upside bias in stocks. There's no question about it. Getting through those lows that we made in March, going to be at best very, very difficult to even get down to them, let alone get through them. Get another round of COVID-19 in the U.S., it will happen. See outbreaks start in big ways, it will happen. See a setback where there's no treatment or vaccine, it might set things off in the fall, not in the summer. They keep telling us warm weather. What do they say? Warm weather breaks it down on the outside. Well, it's warm weather. We're going to be in 80s in Chicago. East Coast will be hot now, so you're going to get more of that. The question is the social distancing. Want to remind you, what I do is in the afternoon, typically, today I was later. My wife has projects in the house. You know what that's about if you're staying home? Projects. So I typically record about 4 o'clock, 3:30 to 4, a SPDR ETF video for you. And in it, I review all my different ones. Now, I'm about up to 29 or 30 charts now. I keep adding them. I get people that write me that are subscribers and they want me to put into these. Remember, the only people that can see this are my subscribers. So you can't ask me to do this. I won't do it on these. I do it in the others, and I want to keep adding that for them. I added today some gold miners out of Canada. Yeah, out of the Toronto Exchange. Our feed carries it, so why not? But you keep getting these ideas, and that's my purpose, to give you ideas what I see, then I match it with my morning futures video. They're very different. Why? Well, this is about ETFs that don't even open to 8:30 in the morning, really. The futures open at 5 in the afternoon, and they'll trade all the way until 4 o'clock the next day. So we get an edge by looking, and it tells us or gives us an idea what those ETFs are going to do. The sectors, no. The sectors are different, and that's because the individual sector stocks can move separately from what these other ETFs are going to play with. The futures will definitely rule the day for that. So I look at that, try to put out ideas for you, and the goal is to give you confidence in ideas you might have. I am not looking to trade for you. That is not what this is about. This is about helping you with your trade, throwing ideas out there that might just go, you know, I was thinking I wanted to do that anyways. The cost, $8.95. If you can't afford that, what can I tell you? Don't look at the video, $8.95. All you need to do is give us a call. You can go to our website under free offers. You'll see some there. But if you really go to the research section, that's where you sign up for all this. So www.iraepstein.com, the research section. You'll see both videos right there. And yes, eventually I'm going to package these together. You can click here as well. That'll take you right there too. I'm Ira. Have a great day. I'll see you all tomorrow.